Good morning. My name is Karen Jones, Content Editor for the Society of Technical Analysts. And this morning we're going to be looking at the US 10-year yield because yesterday we saw the release of the US GDP Q1 figures, which revealed a significantly slower rate of growth than expected, printing an overall figure of 1.1%. The problem that investors have is that economic data suggests that inflation could remain quite sticky, and we saw that household spending remained strong despite the Federal Reserve's most aggressive rate hiking cycle since the early 1980s. And the central bank is widely expected to raise benchmark rates by 25 basis points at its policy meeting next week. So I wanted to give you the near-term levels that you really need to watch for the US 10-year yield. What we've got in front of us here is the weekly chart, and I think it is very clear to see that the market has sold off to this very key 325 level. Now, the reason that this is important is because it is the previous high we got back in 2018. And it also looks to me that it may have completed an ABC Elliott wave count, which suggests, given that this level is still holding, that the overall pressure still remains on the top side. Let's have a look at our daily chart. Now, if you look on the daily chart, it's very clear that the market has been held sideways since the whole of the year, basically. The low down here is at 325, and that is going to be your very key level of support that must hold for an upside bias to remain in place. But as we can see from this chart, the 55-day moving average here coming in at 356, together with recent highs in the middle of April and again in the middle of March at 364, are offering some really good near-term resistance. So really what we are waiting for is a breakout of this short-term range. 325 is the key level on the downside, 364 is the key level on the upside. Currently, looking at longer term charts, it does seem to me that when you refer to that weekly chart and the fact that this could be an ABC and that this level is so key, it does suggest that the overall pressure does remain on the top side. If 325 gets taken out, I would allow for a move down to 3 and possibly 280. But for now, while that holds, 364 is the level to watch on the top side. Thanks very much.